How are venture capitalists revolutionizing the AI startup world? It's a very intriguing, challenging, and loaded question, don't you think, Song?
Indeed, it is, Tamia. VC's impact on AI startups is massive, almost to an extent where it's impossible to imagine this sector without their involvement. The pace at which AI startups have been able to disrupt traditional industries is largely attributable to venture capital funding.
Absolutely, Song. Just think of how increased funding can help with the scale-up process of startups. It not only facilitates R&D, but also provides much-needed support for operational expenses that may often run high, given the nature of AI technologies.
Sure, but Tamia, aren't you worried that over-reliance on VC funding might lead to a loss of control for these startups? And what about the pressure that these startup founders might face during fundraising?
Song, you've touched upon a key issue that often gets overlooked in the excitement of the funding process. The implications of VC involvement in a startup's operations are indeed quite complex. And that's exactly why we're here today, to unpack this topic and delve deeper into the intricate world of venture capital and AI startups. Venture capital firms are like catalysts, in a way, driving AI startups. They provide the necessary financial resources, which is indeed very crucial. But is that all venture capitals offer, Song?
No, Tamia, it's not just the money. Venture capitals also bring a network of contacts, industry expertise, and strategic guidance to the table. In fact, the knowledge capital they bring could be even more valuable than the financial boost.
That makes sense, Song. A startup with groundbreaking AI technology, but weak strategic direction or industry ties wouldn't fare very well. So essentially, venture capitals act as more than just investors. They can be partners in growth, correct?
Exactly, Tamia. With their industry know-how and strategic insight, VCs can help startups navigate the rough waters of the business world. They often come in with an outsider's perspective and can provide a valuable macro view of the industry, competition, and market trends.
That's interesting. I've even heard about venture capitals funding research and development efforts in AI startups on a significant level. They aren't shy of placing big bets if they believe in the technology and the vision of the startup. I suppose these observations imply that the role of venture capitalism isn't about churning fortunes alone, right?
You're right, Tamia. The key is that they're betting on innovations that could potentially disrupt the marketplace and yield impressive financial returns. So they're indeed about fostering technological advancements. They're serving as a kind of springboard for AI startups to innovate, experiment, and make breakthroughs, contributing fundamentally in reshaping the future.
Song, considering the dynamism existing between VCs and AI startups, one can't help but notice the mutual influence they have on each other's growth. Let's delve a bit deeper into this synergy they share.
That's a critical aspect, Tamia. VCs aren't just funding sources for AI startups. They are growth partners. Consider their strategic role in shaping the startup's market entry strategies and business expansion. They're like coaches guiding the founder team, providing invaluable insights from their wealth of experience.
Certainly their wealth of experience. But what about AI's influence on them? Is it not equally substantial?
AI startups also have considerable influence on VCs. Startups that successfully integrate AI into problem-solving and innovative solutions get VCs excited because they see the potential of major returns. So, these VCs keep a keen eye on developments in AI, constantly adjusting their strategies and capital allocations to adapt to shifts in technology.
Given that, Song, is it safe to say that the pressure is high on AI startups to constantly innovate and impress VCs?
Yes, there's a degree of pressure, not just to attract VC funding, but also to keep investors on board once they're invested. So, while VCs play a key role in supporting these AI startups, the startups themselves are driving V behaviors by demonstrating the potential value and success of their AI-driven innovations. That's a pretty unique relationship right there.
Let's jump into the real-world impact of VCs. Song, any AI startups come to mind that have significantly benefited from VC funding?
One standout example is SenseTime. They're an AI company known for their facial recognition technology. They secured funding from ventures like Silver Lake, Star VC, and Morningside Venture Capital. their innovation was noticeably enhanced with the funding, leading to an explosion in growth and becoming the highest-valued AI startup globally.
Fascinating story, Song. The venture capital played an essential part in its success. But what if they hadn't secured that funding? Do you think they'd still have achieved this level of success?
That's a tricky question, Tamia. VC funding obviously provides a significant boost. It's not just about the money. VCs provide strategic direction, industry connections, and market insights. But then again, it also depends on the startup's inherent potential and the founder's acumen. It's quite situation-specific.
Makes sense. While funding is important, we shouldn't ignore the grit, innovation, and discipline that the founders bring into the mix.
Absolutely. Similarly, UiPath, the AI-powered robotic process automation company, received its early funding from SeedCamp, an early-stage micro-seed investment fund. With the aid of these VCs, UiPath not only developed its AI technology, but also strategically expanded its business to a global scale. Again, this isn't to say that without VCs they wouldn't have succeeded, but the journey might have been lengthier and more challenging.
So the need for VC funding seems rather contextual then. For some AI startups, it could act as a catalyst, potentially accelerating their growth. For others, it might not be vital, but could still provide some valuable support.
Exactly, Tamia. In a nutshell, while VC funding does provide AI startups with immense support and opportunities, it's not a one-size-fits-all solution. But one thing's for sure, it's a powerful tool that can be leveraged by AI startups for exponential growth.
Don't VCs typically look at more than just the technology when evaluating AI startups, Song?
You're on point, Tamia. While the technology is crucial, VCs are also interested in the business model. They're looking for clear monetization potentials and market size the startup targets. Essentially, they want to know how your AI can solve a disruptive problem in a specific market.
I'm curious, in evaluating AI startups, do certain metrics carry more weight?
Different VCs might prioritize differently, but common metrics include revenue growth, customer acquisition cost, lifetime value of a customer, and operating efficiency. For pre-revenue AI startups, they might look at user growth, engagement rate, or retention rate. But again, the uniqueness of the AI technology and its applicability in real-world solutions can't be understated.
Okay, so it sounds like a lot of considerations come into play. How does IP fit into this evaluation?
Great point, Tamia. Intellectual property, especially in the AI sector, can be a major draw for VCs. A strong suite of patents or unique algorithms give the startup a competitive edge, and in some cases, provide a moat against competitors.
Plus, I assume the team behind the AI startup plays an essential role?
Absolutely, Tamia. A competent, diverse, and passionate team is often seen as a key factor. Founders' experience, technical skills, and domain expertise can hugely impact a startup's trajectory and chances of securing funding.
Song, are there any red flags VCs watch for when evaluating AI startups?
Red flags might include a lack of clear business model, over-reliance on a single client, or inconsistency in data and financials. Also, if the AI technology doesn't offer significant differentiation, or the market seems saturated, that can be concerning for VCs.
It's quite intriguing how venture capitalists evaluate AI startups, but I've also read some criticism toward their methods.
I see where you're going with this, Tamia. Yes, many argue that the current evaluation methods lack transparency, and that could be detrimental to startups.
Exactly. And I've often wondered if there's any inherent bias. For example, how is it feasible for venture capitalists to objectively assess the intrinsic value of a foundational technology like AI? Aren't they more inclined towards immediate returns, rather than the long-term potential of the startup's AI?
That's a valid concern, Tamia. It's also echoed by some industry experts who believe that VCs might overly prioritize short-term profitability over a startup's potential to innovate disruptive AI solutions.
Surely then, there's a need for more transparency, and maybe even changes in the evaluation process.
Sure, there's always room for improvement. A more transparent evaluation process could help AI startups better prepare for VC funding rounds. Additionally, encouraging VCs to consider the potential long-term societal impacts of a startup's AI could lead to a more balanced and future-oriented investment landscape.
What about potential bias against founders who are more tech-focused rather than business-oriented? Isn't this sidelining brilliant technical minds who may not be as business-savvy?
You're asking some hard-hitting questions, Tamia. Certainly, a founder's technical prowess shouldn't be overshadowed by their lack of a business background. Structuring VC evaluations to give equal weight to the technology and business aspects could help address such bias. Tamia, let's now delve into how venture capitalists spot potential, groundbreaking AI startups. What do you think are the key factors they'd look out for?
A complex issue, Song. But as far as my understanding goes, I believe that innovative technology forms a core part of the whole equation.
Indeed, and coupled with that, a robust business model should also hold considerable weight.
Not forgetting a strong founding team. VCs love businesses run by competent and driven founders. Ones where it's clear they understand their market and have a well-laid-out growth strategy.
But what about the AI aspect, Tamia? Do you think VCs prioritize startups with more advanced AI or those with AI capabilities that can potentially disrupt a specific market sector?
I think it's a mix of both, Song. A startup's AI needn't necessarily be ultra-advanced, but it should demonstrate a clear value proposition.
Certainly. So in essence, VCs might be attracted to AI startups with an edge in technology, a solid business model, and a team capable of executing it.
Exactly. And don't forget the wild card factor. Those intangible qualities like a founder's passion or a unique vision that can just tip the balance.
Great point. So, spotting potential AI innovators isn't merely a numbers game. It's about seeing the bigger picture and recognizing when all the pieces fit together in a way that suggests the potential for significant disruption.
Song. When we're talking about spotting potential AI innovators, it's also crucial that we touch on the struggles venture capitalists face. Have you had any insights into that?
Tamia, a struggle that I've frequently seen is the rapid evolution of AI technologies itself. Due to the rapid pace of AI development, it's a challenge for venture capitalists to keep up and evaluate the real potential and practicality of a startup's tech.
Absolutely. And it's not just about understanding the technology. It's about foreseeing its potential real-world applications, isn't it? The ability to predict how it can disrupt the market and contribute tangible value, which unfortunately isn't always obvious.
That's an excellent point, Tamia. AI is a broad and complex field, and each sector requires a distinct skill set for innovation. It's difficult for VCs to be experts in every area.
This brings to mind the case of DeepMind, an AI startup acquired by Google. Remember how DeepMind was initially overlooked by many VCs despite its cutting-edge technology? Anyway, Song, since you've got a keen eye for AI technologies, could you quickly explain what made DeepMind so innovative?
DeepMind's primary innovation was their development of AI that could learn how to play video games at a human level purely from pixel inputs. This was a significant leap in terms of machine learning capabilities at the time. But what stood out for me was how this core technology could be extrapolated to solve complex real-world problems.
Unfortunately, DeepMind's nuanced potential didn't immediately resonate with all the venture capitalists, which goes to show the difficulty of recognizing true AI innovation. It's a balance of understanding the technology and visualizing its potential disruption, all while appreciating the passion of the founding team and their ability to execute the vision. Song, we've discussed how VCs spot potential AI innovators, but once they've found them, that's just the beginning. One of AI startups' most pivotal steps is the growth phase, and that's where venture capital really comes into play. Are you aware of any particular success stories where venture capital played a key role?
Absolutely, Tamia. I can think of several, but one that stands out is the story of OpenAI, an artificial intelligence research lab that was backed by high-profile VCs like Khosla Ventures and Infosys. They were able to leverage the investment to intensify their research efforts and reach new milestones in AI technology.
That's definitely an interesting one. OpenAI has certainly made significant strides in AI, partial credit to the support they received from their venture capitalists. Song, I'm also intrigued by the delicate dynamics of balancing funding with independence. From our prior knowledge, how can startups maneuver this?
That's a tough one, Tamia. The primary purpose of VC funding is to fuel startup growth. However, founders often risk losing some control of the company, as VCs expect a return on their investment, often exerting influence on company direction. Yet, not all VCs insist on control. Some are content to play a mentor role, sharing their experience and business acumen. This delicate balance is a tightrope that every startup has to walk.
That's true, Song. With that said, securing VC funding does not mean the end of a startup's independence. Founders must strategize on maintaining control, whilst also staying attuned to the valuable insights of their investors. Having clear, open, and assertive communication is key here. VCs don't just provide financial funding, right, Song? They play an integral part as mentors and partners in the development of AI startups, too. What are your thoughts on this mentorship role they often assume?
They absolutely do, Tamia. From what I've gathered, the top VCs are not just check writers. They bring in years of industry experience, networks, and accumulated wisdom. These can be a real source of guidance and fence-sitting for the founder teams. For instance, one of my friends at an AI-based healthcare startup mentioned their VC played a crucial part in devising their go-to-market strategy. They helped them understand dynamics of the healthcare industry, saving them years and millions, potentially.
That's a perfect illustration of why the role of VCs extend beyond financial investment. They can guide startups as they navigate uncharted territories, provide counsel on key hires, and share strategies based on past experiences. But Song, what happens when the mentorship clashes with the vision of the founders? How do successful AI startups tackle such situations?
That's a profound question, Tamia. It's important to remember that every startup bridge is a unique path. In cases where views differ, I believe it's crucial to align everyone's objectives. Founders and VCs alike need to engage in open, honest, and transparent discussions about the best steps moving forward. Of course, while respecting the fact that it is the founders who are the heart of the operation. In such a collaborative setup, the hope is that the collective intelligence prevails.
Song, for our AI enthusiasts out there seeking VC funding, what do you think they should consider foremost?
Well, Tamia, given that I'm an engineer, my thoughts might not be fully comprehensive. However, based on what I've read and my interactions with startup founders, timing is crucial. Startups need to identify the perfect moment when they've achieved a balance between demonstrating potential and needing resources to scale up.
In that sense, it's not just about having a great AI technology, but also a compelling business strategy. Even with groundbreaking AI, founders need to ensure they have a market-ready product and a sustainable business model, correct?
Absolutely. I've seen many technologies with potential fail because they lacked a clear path to market. Also, readiness is a key aspect here. Founders should ensure their startup can withstand the due diligence process that VCs will put them through.
Right. They'd be scrutinizing everything from the technology to the team and financials. Now, what about potential obstacles? Can you talk about those?
Sure. One challenge that founders often don't anticipate is managing their relationship with their investors post-funding. It's not just about getting the capital, but also building a productive relationship. If conflicts arise, it can distract from core business operations.
Good point. And I suppose this goes back to balancing the view of VCs as both investors and mentors. Now, before we wrap this section, let's talk about pitching. I've heard a great pitch is a startup's golden ticket.
Exactly, Tamia. The pitch is where the magic happens. Founders should demonstrate not just their technology, but how it can solve a problem better than existing solutions, all while keeping it concise and articulate. Remember, a pitch is a story, and success lies in telling that story well.
What kind of questions should startup founders be prepared to answer during a VC interview? It's something I don't know a lot about.
That's a good question, Tamia. One of the most critical aspects is that they should be prepared to answer comprehensive questions not only about their AI technology, but also about their business strategy. A VC would want to know the practical effectiveness of the AI technology in solving a real-world problem. On top of that, they might ask how well the founders understand their market and what makes them different from existing competitors in the space.
The dialogue doesn't just stop at technical depth, right? A VC may also ask about the team's capabilities and its long-term sustainability.
Spot on, Tamia. They might inquire about the team's dynamic, its adaptability, and what makes this team capable of handling their technology and market, especially in case of pivoting. Clearly explaining their future vision and how they are planning to achieve that is also crucial.
Wow! So, a VC really delves deep into every facet of a startup. What if a startup can't answer all those questions right away?
While it's important to have ready answers, demonstrating willingness to learn and adapt can also work favorably for startups. As important as it is to show technological and business acumen, it's equally essential to illustrate the team's resilience and growth potential.
So, Song, we've discussed what venture capitalists look for in AI startups and the kind of questions founders need to be prepared for. But how has venture capital as a whole shaped the broader AI industry?
I think you'll find venture capital has been instrumental in the growth and development of the AI industry. Unlike traditional businesses, AI startups require heavy investments during the initial stages for technology development and market positioning.
That makes sense. If these startups are to pioneer new technologies, they'll need a solid financial base to start with.
Exactly. And this is where venture capital plays a critical role. By providing the necessary funding, VCs essentially fuel the evolution and experimentation of AI-based models, thereby pushing the boundaries of what's achievable with AI.
But it's not always a smooth sail, is it? What about the potential risks for the founders?
That's true. While venture capitalists can open the door to immense possibilities, their involvement might also impose certain limitations on founders' control over their own startups. It's a complex relationship that requires delicate navigation.
Seems like a tightrope walk.
Yes, but it's part of the entrepreneurial journey. Founders need to balance the potential advantages of VC funding with its possible pitfalls, while also considering alternative funding sources.
So, VCs don't just fund AI startups. They also shape the broader AI industry. I never really grasped this aspect in all its complexity. Venture capitalists, in my view, are not just investors. They are key change catalysts in the AI industry. They drive breakthrough innovations by providing the capital, mentorship, and resources necessary for AI startups to thrive.
Absolutely, Tamia. If we consider the success stories of AI companies like OpenAI, SenseTime, DeepMind, it's evident that these companies might not have reached their current success level without substantial funding and guidance from venture capitalists. The role VCs play extends beyond the financial aspect, as they also help shape the strategic direction of these AI startups.
So what you're saying is that venture capitalists are indeed instrumental in fostering an environment conducive to the proliferation of innovative AI solutions.
Yes, Tamia. VCs are often considered as an active participant in the startup's journey, as they not only provide the financial means for startups to scale, but also often offer valuable industry insights and access to their network of contacts. In fact, the influence of venture capitalists on the AI industry cannot be overstated.
That's enlightening, Song. However, I do worry about the potential risks for the founders. Can this involvement of VCs also impose limitations on the founders' control over their own startups?
It's a valid concern, Tamia. The power dynamics between a VC and a startup founder can indeed be a complex relationship to navigate. To maintain a healthy balance, founders should negotiate terms that protect their interest and vision for the startup as much as possible.
So, Song, considering these factors, how do you see the future of AI with VC funding?
Despite business uncertainties, I believe with VC funding, AI is poised for great things. Large-scale development and deployment of AI can revolutionize industries and society as a whole. Capital from venture capitalists will be the driving force behind this growth, as it can accelerate AI innovations, support talent acquisition, and expand market reach. However, startups should also strive for a diversified fundraising strategy to mitigate risks associated to over-reliance on VCs.
Venture capitalists undeniably play a transformative part in the AI startup journey. But let's not forget, Song, that startups don't always sail smoothly in the sea of success. In fact, they frequently meet with failures, right?
Absolutely, Tamia. Failures are not uncommon in the startup world. It's part of the journey and holds the potential to provide valuable lessons. That's where resilient and innovative founders can turn setbacks into comebacks. They find ways to iterate on their strategies, refine their offerings, and persist in the face of adversity, often with the support of venture capitalists, who are sometimes referred to as smart money.
Smart money indeed. By injecting not just funds, but expertise, strategic guidance, and network access, VCs can assist their portfolio companies to troubleshoot, innovate, and ultimately succeed. However, Song, we must be mindful of the fact that while venture capitalists eagerly sign up for high-risk, high-return policies, not every AI startup can deliver on such expectations.
Fair point, Tamia. Expectations and returns indeed carry a challenge. Let me extend your thoughts here and ask something. Isn't overcoming failure a key trait of successful VCs as well? Aren't they also continuously navigating the thin line between risk and reward?
Well, that's a perspective we often overlook. You're right, Song. Venture capitalists, too, face their share of failures. Failed investments can lead to great losses. However, they do have a safeguarding mechanism. The potential for huge gains from one highly successful investment can offset losses from several unsuccessful ones. So, it's all about balancing the portfolio, isn't it?
Balancing the portfolio? Yes, Tamia. Additionally, lessons learned from failed investments can help VCs refine their evaluation criteria and betting instincts. Let's remember, investing in a startup is somewhat like playing chess. It's not just about winning one game, but to learn and implement strategic moves for future games. However, while celebrating the successes, we should also acknowledge the courage it takes for a VC to invest in disruptive technologies and untested markets. Despite the failures, their belief in the potential of AI is undeterred.
Song, I'm glad you brought that up. It takes real conviction to stay committed to the AI dream, despite setbacks from failed investments. For both AI startups and venture capitalists, the journey is of shared risk and shared reward. Guided by this belief, their collaborative efforts attempt to shape an AI-empowered future. Isn't that the essence of resolute entrepreneurship?
Definitely, Tamia. It's about both surviving and thriving on this shared journey. Despite bumps on the road, AI startups, supported by their venture capitalist partners, have the sheer power to reshape industries, revolutionize technology, and redefine the way we live. And that's what makes this dynamic alliance stand sturdy against the tide of trials.